Big things in the steel industry, which we'll cover. But let's talk about the jobs market because it does remain in a good spot. And give you some numbers here. The headline non-farm payrolls increased by 139,000 in the month of May. That was above the estimate of 125,000. But it was below the reading in April, which is 147,000. So it looks like the jobs could be slowing down a little bit, but not in a terrible, the ADP report on Wednesday really scared us.
Yeah, I mean, it is so hard. I feel like I say this about other things too, but there's all this news that you get, and I don't want to say you want to ignore them, but I talk a lot about the soft data, which is the surveys and stuff. I definitely take that with a grain of salt. The ADP numbers also very strange. That's all over the board. I don't know how much I want to rely on those numbers as like a strong indicator. It's out there. You want to read it, but I wouldn't be like, oh my gosh, the economy's crashing because the ADP said so. And also, too, another one is the household survey. I know that had some bad numbers here for the jobs report. I think it showed a loss of like 600,000 or something crazy. I don't like that one either because I've never personally been called about.
Never have. And I've talked to people. No one that I know has ever been called.
No. So, I mean,
maybe
how strong of an indicator is
that?
that?
I got called. Maybe somebody will tell us I got called.
Yeah, I mean, but we post this stuff and nobody's ever been like, no, actually, I have been called. Nobody's commented. Nobody's told us. I mean, it is just so interesting to kind of see that. And the thing that I also look at with this particular jobs report, as I said, good numbers, but also there are some question marks. The big one is March and April. Did see negative revisions that caused payrolls in those months to decline by a combined 95,000 versus what was previously reported. So, I mean, that's a little bit of I'm going to say a negative there. But the thing I look at is the fact that we've added so many jobs. I mean, we've talked about this before. I mean, we are still at a very healthy employment level considering the unemployment rate remains at 4.2%. We've talked about this before, but you're not going to be in a utopia where unemployment is zero.
Right.
I mean, I'd be hard-pressed to believe we'd even go sub-4.
We were at 3.738, I think, in 2019, I believe it was. I believe there was a time. I know we were sub-4 for a little bit.
I think from today's levels, though, I don't think we're going to go sub-4.
And I do believe 4.2 is pretty much what they call full employment. There's people that just don't want to work. No matter, you can pay them a lot. No, not going to work.
Yeah.
But the economy, it is still adding jobs at a healthy rate, given the fact that the unemployment rate is still at, we just talked about it, still at 4.2%. So that's a good number. It's not scary. It's a good number. A lot of people working.
Yeah, and the other thing, too, that you got to understand here, I mean, we talk about the government as one of the major industries, major components of this report. And we know that at the beginning of the year, Doge, and we're not going to get into the whole Trump-Elon battle here, but we know that Trump and Elon wanted to pull back on the government payroll situation. We're starting to see this finally kind of impact it because government payrolls did decline by about 22,000 in the month of May and are now down by 59,000 since January. So having that negative impact from the federal government and still seeing good positive growth from the private sector, I think is so important. And we're going to need to continue to see that because I think we're going to see the losses accelerate in the government payrolls because you can't forget this. Employees on paid leave or receiving ongoing severance pay are still counted as employed. And I forget the exact details of it, but I want to say a lot of people were on paid leave essentially until October, November. So I'm very curious. Come October, November, we're going to see a huge spike in the losses in government payrolls because that's when all the people will now be officially released.
And I thought it was September. I could be
You
wrong
could be
too.
right.
Yeah,
I don't remember the
September,
exact
October.
month.
But now hopefully these people that got laid off there, they're getting new jobs. So when that deadline hits, whether it's September, October, it's not going to be, oh my gosh, a million jobs, in the payroll because they're already working somewhere else. That'd be the smart thing to do because you're getting paid anyways. Why not go get a job and get paid twice?
I was thinking the same thing. I was like, wow, this is like a golden ticket.
Yes.
I mean, you can use your skills, go find another job, get paid
Max
twice.
out your 401k, your IRA.
But I don't know. I don't know if a lot of people think that way or a lot of people are going to retire in, let's say, 2026. I mean, shoot, you could have retired basically a year early.
Yeah. Oh, yeah. Yeah, that would make a big difference. So we recommend if you're a government job, you're not working, go get the job now, collect 2 paychecks at once and put that in your 401k, invest it. You'll be able to retire earlier is what will actually happen maybe. On the private side, healthcare did add about 62,000 jobs, and leisure and hospitality, I was surprised on this. They did add 48,000 jobs in the month because I thought things would kind of slow down a little bit. That's what you keep hearing, but it is not happening. People are still going out to restaurants and bars. Many of the other industries saw little change, but these two industries still growing at good numbers.
Yeah, and I think you're going to continue to kind of see this. There is uncertainty. There's no denying that with all the tariffs and kind of changes coming to the economy. The positive thing is you're not seeing huge negatives.
Yeah.
I think that was a big thing that people needed to see here in this report. And I'm glad we saw that. We didn't see like business services lay off 50,000 people or anything like that. I don't want to say lay off, but lose 50,000 payrolls. And also, too, you brought this up, but I really want to hammer it home. You're not going to be adding 48,000 people to leisure and hospitality if people aren't going to restaurants, aren't going to travel. You need to staff up if there's more people there. Yeah. So, I think the economy, just another indicator, is doing just fine.
And I think that would be one of the first things to go if you kind of tighten your belt. Yeah. Well, we can't go to dinner tonight. We probably shouldn't take that little vacation. So that's no sign of that.
And also, too, the restaurant industry, I mean, it's a harder industry to staff. So, it's a lot more variable in terms of, needing to add people or subtract people. You are going to need to add more people when you have more people coming to the restaurant. So I think this is, another good indicator. And also, too, people talk about, the pay for jobs. I mean, we're still seeing pay grow, I'm going to say, at a good rate. Yeah. I mean, average hourly earnings, they were up 3.9% compared to last year. That was above the forecast at 3.7%, and also, too, last month's reading at 3.8%. And the big positive I see here, 3.9% is, I'm going to say, a healthy level. You're still seeing a nice increase to your paycheck. It is now above inflation, so you're having real earnings growth, but I don't think it is pressuring inflation too much. It's not like it's a huge cost increase to employers where now they have to increase their price of goods and services at a drastic rate. So I see 3.9% as a healthy rate for wages to grow.
And one thing, too, about this jobs report, it was a good report, but not so good and not so bad. I still think it puts no pressure on the Fed to say, we don't need to raise rates or keep them the same. We can maybe still decrease rates at the next meeting. Do you know what it is? Is it?
I think it's June. I think it's coming up here. Weeks, yeah, and I don't think they will. I know Trump came out and said he wants to lower them by a full %. That's definitely not going to happen. But I look at it and say I think listening to a lot of these Fed governors, they're on wait and see until these tariffs pass, and I think that might be a mistake. I think they could go one or two times because underlying inflation doesn't seem problematic. The employment situation, it's starting to slow a little bit. You might need to juice the economy before employment does fall. I understand where Trump is coming from. I think 1 full percentage is a little bit crazy, but I think moving a little bit wouldn't necessarily be bad.
And one thing I'll argue with him on, he goes, well, Europe's decreased them 7, 8 times, and we've not done it.
I think 10.
10 times. Okay, their economy is so much worse shape than ours is. That's why they're doing it. We don't have to yet. I don't want to miss the opportunity, but it'd be nice if they did. But I think we'll also wait a little bit. We'll see. There was another report that came out. I forgot what it was. So I thought, that could be another one that would reduce inflation.
Yeah.
Yeah, inflation was pretty good. 2%. We're not talking about that? Oh, you talked about that
last week. I talked about last week.
That's right.
That's what happens when you miss a week. You miss some good content.
Okay, I'm going to cancel all my vacation the rest of my life. Okay. Let's talk about the JOLTS report, known as a Job Opening Labor Turnover Survey. Job openings did increase by 191,000 from the month of March and totaled 7.4 million jobs. This also be the expectation of 7.1 million. We did see a turnaround because this was declining. This is a turnaround, additional 300,000 jobs from last month, because I think we had 3 or 4 months where it was constantly declining from very high levels, I will point out.
Yeah, I mean, you're going to have, obviously, it's not going to go down in a straight line, so you're going to have that variability. But you look year over year, job openings did decline by about 228,000, or about 3% compared to last year. But the thing that we still look at as, I think, a very big positive is the fact that there are still 1.03 available jobs for every unemployed worker. So, I mean, the jobs are still out there if you want one.
Right.
I think that's a big caveat, though.
Yeah. And that is, we could get to zero unemployment because there's enough jobs out there to do that. But there's people like, I don't want that job. No, I don't want to do that. No, that's not paying me enough, whatever it may be. So.
And I forget the numbers, but I saw it today in the report. And I want to say something like there's 1.8 million people that have been unemployed for like what they call long-term unemployed, where it's been unemployed for like 12 months or longer. And I'm like, I mean, you can find a job if you wanted one. But, I mean, they might have a nice pension. They might have a nice fallback in terms of assets. They might be like, I don't need a job. I'll just kind of put myself out there, and if the right one comes along. But to me, that's not bad for the economy.
No. And as with other hard economic data, the next few months will be more telling about how the tariffs are impacting businesses and the decisions. This JOLTS report was from the month of April when tariffs were just beginning. So we're going to see about a month from now we're going to see really true effect from the tariffs. And actually, I saw today that I guess the president sent out to all our partners, okay, clock is ticking. You got about a month before tariffs go back up again. So
I know it'll be interesting to see, and this is kind of where, again, we're not short-term forecasters. I'm not going to guess what is going to happen here, but I'm looking at saying there's no denying these tariffs are going to play out in the data.
Right.
That is going to be coming. We're starting to see little inklings of it, but I really think this month, July, August, and especially if there are changes to it, if the partners don't start negotiating, that is, again, where you can really start to see even more variability in the stock market, in the hard data, the economic data. So, I mean, we'll have to keep our eyes open. I don't know what's going to happen. I can't predict what Trump is going to say today or tomorrow, and then how he's going to act with our partners. So we'll kind of have to take it as it comes.
If you could predict that, you'd be a very wealthy man, because nobody has been able to do that. So, but let's talk about.
I don't even think Trump can predict what he's going to say tomorrow.
He is real, because he says what's on his mind, and it could be different today than tomorrow and the next day. So that's why you never know. It keeps everybody guessing. But let's talk about office space, because this could be something